Hey everyone. So, we just witnessed a massive crash in crypto, literally less than 24 hours ago. And when you pull up the daily charts right now, it's honestly brutal. We're talking 20%, 30%, and in some cases over 40% losses across the board. Even top-tier altcoins got hammered. Take HBAR, for example, down 18.5% in just the last 24 hours alone. And it doesn't stop there. If you look at other major altcoins like XRP, XLM, and QNT, they're all down more than 12% on the day. It's pretty rough out there. So here's the million-dollar question. Are we staring at the beginning of a bear market? Or is this actually the last major correction before we see the biggest rally this market has ever had? Personally, I'm betting on option 2, and I'll break down exactly why in just a second. But first, let's zoom out and look at the overall market damage. Bitcoin's down about 7.5% on the day and 8% for the week. Ethereum, even worse. 11.6% daily and 14.5% weekly. XRP is sitting at 12.3% down on the day and 17.3% for the week. Now here's the crazy part. These losses, as bad as they look, aren't even the worst we've seen. Some altcoins got absolutely wrecked on a single wick, dropping around 80%. So believe it or not, what we're seeing with XRP and others, that's actually not as catastrophic as it could be. Look, I know this is incredibly tough to go through, especially if you're new to crypto. And I'm not going to sit here and say, oh well, back in previous cycles we saw this every other month. But honestly, we did. This really is nothing new. Welcome to volatility. Here's the thing about crypto. When we talk about how volatile this space is, we usually focus on those explosive upside moves, right? But you have to remember the volatility works both ways. It goes up aggressively and it comes down just as aggressively. So what happens? When we see crashes like this, our brains immediately think
it's over. Everything's done. But then, when prices start pumping like crazy, we think, this is just the beginning. It's never going to stop. It's all emotions. That's what drives these reactions. But here's what I need you to understand about this entire situation. We will get through this. Crashes like this, they're part of the game. They've always been part of crypto, and they always will be. This is nothing new to the space. And it's definitely not the end. Breaking down the charts. All right. Now let's dive into some key charts, because this is where things get really interesting. First up, let's talk about the total altcoin market cap chart. Check out this level down here. This was a textbook perfect retracement. We pulled back right into major demand zones that we haven't seen since way back in 2024. And that wick? Absolutely massive. We're talking about a single daily candle that dropped over 21% from top to bottom. That's insane. Now, I'm not sitting here claiming we've definitely hit the bottom, but what I am saying is this would be the perfect spot for us to find our floor. And if you look at the weekly chart, actually, let me take you back to one specific candle that every single person in crypto remembers. I'm talking about the COVID crash. In just a few weeks, roughly 1 month, the entire crypto market plummeted 65%. 65%. Now, compare that to where we are right now. The total market is currently down 24%. When you put it in that perspective, this is actually a very normal correction for crypto. I get it. It doesn't feel normal because there's way more money in the market now. We just witnessed a $1 trillion loss. But this is standard price action in crypto, especially in a market that's this volatile. Now, let's look at the total 3 chart, which excludes Bitcoin and Ethereum. I definitely expected this to sell off. I just didn't expect it to be this brutal. I was hoping we'd maintain some higher lows in this area. The good news? Our wick is still creating a higher low compared to that bottom we hit back in April, which marked the absolute bottom for the entire market.
But yeah, this is definitely a significant sell-off. On a single weekly candle, the altcoin market dropped over 46%. That's extreme, even for crypto standards. But here's where it gets interesting. When you zoom into lower timeframes like the 3-day or daily charts, and the daily is really the sweet spot here, we're finding support right on a key level. Specifically, the level I was hoping we'd find support at, right around that $691 billion mark. The main thing I'm watching right now, though, RSI, the Relative Strength Index. Look at the bottom we hit back in April, and then again in June. They both bottomed around the same RSI level. And guess what? We're very close to those same bottom points right now. What does that tell us? We might see a bit more choppy price action through the weekend, but we should be bottoming around these levels. In fact, I believe this recent move should be the bottom for this market. If it's not, then honestly, I'd have to argue that we're entering a bear market for crypto. Now, I don't think we are, but I'm just being real with you. That's what I'd be considering if this turns out not to be the bottom. The same analysis applies to the total market cap chart. Obviously, on the daily time frame, the trend line looks a bit different because we're zoomed in. But when you look at the daily view, we've got that bottom from February going into March of this year, and then April, which marked the absolute low point. Our RSI still has a tiny bit more room to drop. Like I said earlier, we could see some more sideways choppy action before the weekly close. And speaking of the weekly close, that's really what I'm focused on right now. The main thing I want to see is a close above some of these recent lows. Ideally, I'd love to see us close above $3.71 trillion, and preferably a bit above this trend line as well. The waiting game and stock market analysis. So really, we just need to be patient here and watch how things develop. Now, when it comes to stocks, I'm actually looking for a bit more pain. And I know that sounds crazy, but hear me out. I'm eyeing the 6,446 to 6,521 range. That would essentially be retesting some of these previous highs, and then from there, we'd probably continue pushing towards $7,000 and beyond. We could potentially revisit that April bottom again. And check out the RSI. It just got completely wiped out. This is basically a full reset. And honestly, we needed this reset anyway. I was talking about this in several videos leading up to the sell-off. The RSI was extremely overbought. When you look at the weekly chart, you can still see we were deep in overbought territory. We just broke down through the moving average, and I do think we've got a little more pain coming. If you zoom into the lower timeframe structure, the RSI was already showing bearish divergence while prices kept pumping higher. So we knew some kind of major pullback was coming. We just didn't expect it to be this violent. But beyond the short-term pain, this is actually, technically, very healthy for the market. What the experts are saying now, there's one person you should definitely be following in this space, Tom Lee. He just said on CNBC that today's pullback looks like a buying opportunity, and that stocks could be 60 points higher just a week from now.
At Fund Strat, Tom, it's only one day. We get it. We're still, the bull market we heard earlier, still intact. But your take on today's move and what may lie ahead?
Well, Brian, it may be overdue to an extent. We've had a nice rise of 36% since the April lows, and I believe today's decline is the biggest in more than 6 months. But it's good to see the VIX spike. The VIX spiked at 1.29% today. That's the 51st largest ever spike in the VIX. So we're a top 1% move in sort of what I'd say the market seeking safety. And so I think it's a good flush that's happening today. I would like to say the market is, concerned, but as your other guests have said, especially Rick, I mean, unless there is a real structural change, this pullback is a buying opportunity.
Wow, 51st biggest move for the VIX. So why is it good that the VIX is responding? What does that signal?
It shows you that investors are seeking protection. And as you know, the VIX is a measure of expected volatility of the largest 100 stocks. And so a spike in the VIX is really a market saying, okay, I need to get out of everything, but I can't sell everything. So let me hedge it by buying volatility. And that is usually a sign of an interim low. I mean, I don't want to say I think markets are bottoming today, but we know that the forward returns are pretty good 1 month and even 1 week later. So I would say if someone says, are we higher a week from today? I'm going to say the odds are actually really good. Or, we might even be 60 points higher.
Well, wow. But that's happened. That's what's been happening, as we talked about earlier in the show, Tom, that we've seen these buy the dip buyers come into the market. We get a day like today, the dip buyers come in, we're higher a week later. Do you expect that to happen again, absent some further escalation with China?
Yeah, I mean, anything's possible, Brian. And I think that the markets lived through this February to April, and it was a day by day panic, and maybe there's echoes of trauma people are thinking about.
And that's exactly why the markets have been so shocked by Trump's recent announcements. Everyone's thinking back to the beginning of this year, and all they can think is, wow, these markets are completely cooked for the next month, 2 months, maybe even 3 months. And that's where I think almost everyone is about to make a huge mistake. So many people are sitting on the sidelines right now. They're going to wait it out, prepare for the worst over the next month or two, and wait for lower prices. But I really believe we're going to bounce back sooner than people think. Signs of strength already emerging. And here's the thing, a lot of these charts are already starting to show signs of strength. Take Bitcoin, for example. Yeah, we had a nasty sell-off back down to about $104,600. That's a low we haven't seen since way back in June. But where are we potentially looking to close? Still higher than those August lows. Even with Ethereum, sure, we dropped down to that low from early July and the beginning of August. Where we're trading right now isn't ideal, I'll admit that. But this was a beautiful liquidity wick that grabbed liquidity, retested a major support zone, and we bounced from it. Is it the strongest bounce right this second? No, not really. And I think it's a bit too early to say, all right, yeah, we've completely bottomed out, everything's going to rip from here, buy up all the dip. No, typically you want to wait this out a little bit, see how the markets look on Monday. But here's what I really think. This sell-off was 100% exaggerated. I believe a huge chunk of this was driven by liquidations. We're talking over $16 billion in liquidations that sparked a massive cascade effect. This led to $1 trillion being completely wiped from the market. Even established coins like XRP had massive wicks to the downside. We're talking about a drop to $1.54 from the high.
Think about this for a second. In a single day, the high on that daily candle was $2.59, almost $2.60, and we hit a low of $1.52, nearly $1.53. When you really think about how significant that sell-off was, yeah, it was extreme. XRP wicked all the way back to levels we haven't seen since November 2024. And this was purely a liquidation wick. This was all about liquidity getting grabbed on the downside, creating a cascade, a major liquidation event. We've seen these before, especially going back to 2020, and typically I look at liquidation events like this as a bottoming signal. A warning about leverage. And for anyone out there who wants to play around with futures, this is exactly why I always tell everyone to avoid getting into these leveraged positions. We just watched so many traders get completely wiped out because of this. So when it comes to being smart in this space, the best thing you can possibly do is just hold spot positions and keep stablecoins on the sidelines at all times if you're able to, because you never know when something like this is going to hit. Bitcoin, the main focus. Now, when it comes to crypto, the main focus right now is Bitcoin. I'm looking at this on the 4-hour chart. I expected Bitcoin to hold at least one of these 3 support zones. Instead, we completely blew through all 3 of them. We wicked as low as $103,200 on this chart. Currently, I'm watching to see if this uptrend can possibly hold on the 4-hour time frame. The 4-hour is completely overcooked, the most overcooked we've been since going all the way back to April of this year, which is when we saw the market completely bottom out. It's still too early to make the call right now. Looking at the 4-hour, I really want to see us reclaim $113,000. After that, we can start to reclaim some of these other key levels. And if we manage to reclaim all 3 of these zones, then I think Bitcoin has bottomed, and we should start seeing that nice recovery take shape. Looking at the daily chart again, I'd like to see a bit more from Bitcoin here.
Maybe find some solid support around the previous support zones we've established on this chart. Ideally, I'd love to see $112.4 thousand hold, just like we saw back in August. After that, we could start building back toward $120,000 and beyond, but we just need to give it a little bit more time here. I would strongly advise you not to go all out and just start throwing money around, trying to catch a falling knife. Smart buying strategy. If you are looking to buy the dip, here's my advice. Average in slowly, wait it out a bit, and see if we get even lower prices. Once we get that solid confirmation that we've bottomed and we start building back to the upside, then you can be more aggressive with your entries. And hey, buying a little bit higher is not a bad thing at all. I see so many people say, "Oh, I wanted to buy the exact bottom." Listen, you're never going to nail the exact bottom. That's just reality. And that's exactly why I always say I'd rather buy when we have clear confirmation that we're heading much higher, rather than trying to catch a falling knife and getting my hand cut off in the process. But overall, I genuinely think this market sell-off was a massive exaggeration, very similar to what we saw back in April of this year. I really believe that even if this sell-off continues a bit more, which I am expecting by the way, we could go as low as $6,393, basically retesting those highs from July and August. But here's the thing, I really don't think we're going to have to wait as long as we did during that period, from February all the way through April, which was about 48 days of pain. I don't think we have to wait that long this time. A lot of people are expecting us to be stuck in this downtrend for weeks, thinking the markets are just going to keep bleeding. I don't expect that at all. I think we bottom way sooner than most people anticipate. And then, from that point on, we start really building back to the upside.
Just like Tom Lee said, things could completely change a week from now. We don't know exactly when the turn will happen, but that's why we need to give it a little bit of time. Be patient during this period. And most importantly, stay focused on the big picture here. Is this the start of a bear market? I don't believe so. I really don't. I think once we get through this noise, and that's exactly what I believe this is, just noise, we're going to see these charts start cooking again. So with that being said, I hope you guys found this breakdown helpful. If you did, definitely smash that like button, hit subscribe, and turn on those notifications so you don't miss any updates as this market develops. I'll be keeping you posted every step of the way. Thanks for watching, and I'll see you in the next one. Stay strong out there, and remember, we've been through this before, and we'll get through it again. Peace.